Alright, stop what you're doing. If you're looking at Bitcoin up 2% and thinking the bottom is in, I need you to listen very carefully, because you are about to step into a trap that the institutions have already laid. Right now I'm staring at the chart, and there is one danger zone at $60,383 and one hidden opportunity that nobody is talking about, a liquidity grab below $59,662 that will fuel the next leg down. I'm going to show you exactly how this plays out. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. This is not a drill. This is the moment where volatility turns into profit if you see what the herd doesn't. Now, here's the instant market verdict. The session bias is crystal clear. We are fading this rally inside a monthly, weekly, and daily strong sell structure. I know the 1-hour chart is flashing strong buy, and that is precisely why the trap is so dangerous. That little burst of green is buying time for smart money to reload shorts. Write this number down. If Bitcoin closes a 4-hour candle above $63,075, the entire bearish structure resets. But until then, every pump is a gift. The single invalidation level that flips my bearish bias today is not that high. The immediate level that says this bounce is real is $60,383. If we accept price above that resistance with volume, the short-term picture shifts neutral. But right now, the herd is long. Funding rates just ticked positive again after being negative for 3 days. That means late retail longs are piling into this bounce, and their stops are sitting just below $60,000. That's a big, fat pool of liquidity. And I promise you, the market hunts that pool before it does anything else. Let's walk the charts from the top down, because this is where the confirmation stacks up in a way that screams trap. On the weekly time frame, Bitcoin remains a strong sell. Price is below every major moving average, the 20-week, the 60-week, the 200-week. The weekly MACD is deeply negative, printing a bearish signal line that's been widening for 4 straight weeks. There is no base, no accumulation, just distribution. The weekly pivot sits at $59,662, and that level is magnetic. The weekly structure is a series of lower highs and lower lows, and this week's high so far is barely scratching $60,400. The trend is your friend, and on the weekly, the trend is aggressively pointing toward $58,100 and then $57,288 now drop to the daily. The daily is strong sell, same message. Price just had a dead cat bounce from the $58,800 zone, but it's still trading well below the 20-day moving average at $63,075, the 50-day at $66,722, and the 200-day at a distant $77,274. Those moving averages are stacked in perfect bearish alignment, the 20 below the 50 below the 200. That's textbook. The daily MACD is at minus 2,713, which is an enormous negative print. Momentum is not just bearish, it's aggressive. The RSI on the daily is 35. 15% of traders see that and think oversold. They're wrong. 35 is not oversold, it's just weak. In a strong downtrend, RSI can stay pinned between 25 and 40 for weeks. This is not a buying opportunity, it's a continuation signal. The daily CCI just kissed minus 99, flirting with that minus 100 line, which could trigger a small intraday bounce, and we are in that bounce right now, but under a strong sell regime, those bounces are selling opportunities, not reversals. Let's go to the 4-hour. Here's where it gets really interesting. The 4-hour trend is neutral, and the chart is printing what looks like a bear flag or a rising wedge after that sharp drop. Price has crawled from $58,800 up to $60,346, and it's now banging into the first resistance cluster at $60,383. That's the R1 pivot resistance, and just above it is the 5-hour MA cloud. The 4-hour MACD is still negative, though the histogram is inching toward a potential cross. But here's what most traders miss, and I'm going to slow down for this because it's a retention bridge that separates the winning trades from the noise. On the 4-hour, we are seeing a textbook hidden bearish divergence. Price makes a higher high, but the MACD histogram makes a lower high. That is not bullish. That is momentum dying on the bounce. That hidden divergence tells me the rally is running out of steam, and when it cracks, it will crack fast. Put a note on your chart. The last time we saw this pattern in April, Bitcoin dumped 12% in 3 days, now dropped to the 60-minute chart, the one that's screaming strong buy. It's true, the 1 hour has pushed above the 5 and 10 period moving averages. But the 1 hour is nothing more than a noise amplifier when it's fighting the daily and the weekly. The 1 hour RSI already hit 80 and is curling down. The 1 hour stochastic is at 89. That's deep into overbought territory. That tells me the short-term rocket fuel is nearly spent. The first sign of failure on the 1 hour will be a close back below the hourly MA20, which is currently around $60,200. Below that, the whole 1 hour structure collapses into the pivot at $59,662. The support levels below are clearly defined. S1 at $58,836, S2 at $58,114, S3 at $57,288. Those are your targets. The resistance levels are $60,383, then $61,210, then $61,931. But I don't think we even sniff $61,200 today. The real battle is at $60,383. That's the session's danger zone. Now let's bring in the cross-asset linkage, because Bitcoin does not trade in a vacuum, it is the risk asset shadow. Right now, S&P 500 futures are struggling to hold their own key gamma level, and every time equities dip, Bitcoin amplifies the move. The correlation over the last 10 days is over 0.8. That means if the S&P rolls over this afternoon, Bitcoin's bounce gets obliterated. Add to that the fundamental driver that everyone is underappreciating. ETF outflows are persistent. The news wires are not screaming it, but the flow data shows institutional capital is still leaving the space. We are heading into the quarterly close, and Bitcoin is on track for a double-digit quarterly loss. Fund managers don't want that on their books. They're trimming into strength. That's why this bounce feels weak and desperate. The 24-hour headline is Bitcoin ticks up above 60,000 but heads for quarterly loss as ETF outflows persist. Read that again. It's not a recovery. It's a trap before a critical accounting deadline. Funding rates tell the same story. After being in negative territory, meaning shorts were paying longs, we've now flipped slightly positive. That means late longs are paying to stay in, and their conviction is thin. If Bitcoin even breathes below $60,000 again, those longs will get liquidated, and that cascade is what takes us to $59,000 in a blink. The smart play is to front-run those liquidations, so here's my 1 to 2 week directional lean. Further downside toward $58,100, and if the quarterly close breaks that level, the next leg opens $57,288 and then a potential vacuum down to $52,000. The level that would kill this bearish thesis is a daily close above $63,075, the 20-day moving average. If that happens, the trap failed, and I'll flip neutral. But until then, I am selling rallies. Do you think Bitcoin closes the quarter below $58,000? Drop a yes or a no in the comments right now. I'm tracking consensus, and I want to see if this community is ahead of the herd. Type it in, yes or no. Now we enter the trade setup section. Most people skip this. They watch the analysis and then leave before the executable plan. That's exactly where the money is made. So if you're still here, you're already ahead of 90% of traders. I'm giving you 2 scalping strategies and 1 swing strategy. These are not theories. These are the trades I'm watching live. Strategy number 1, the opening scalp. This is a high probability fade at the first resistance. Right now Bitcoin is hovering just below $60,383. The setup is simple. Wait for price to tap that $60,380 zone. You do not just blindly short the number. You need a trigger. On the 5-minute chart, you wait for a bearish engulfing candle or a strong rejection wick that closes back below $60,350. That's your signal that the trapdoor is opening. Entry: $60,340 to $60,360, depending on confirmation. Your stop loss goes at $60,520, just above the local high and the wick. That's a tight stop, about $160 of risk. Your first take profit is $59,900, right at the round number psychological level where intraday liquidity sits. That gives you a scalp level risk reward of roughly 1 to 1.5. If momentum is strong, you hold a runner for take profit 2 at $59,662, the weekly pivot. That's where the bigger money will take profit, and the bounce might start. So the full trade is short on rejection at $60,380, stop $60,520, TP1 $59,900, TP2 $59,662. What? Instantly voids the scalp? If the 5-minute candle closes decisively above $60,450 with no wick rejection, the structure has changed. Do not fight it. Move on the opening SELP entry, $60,350, 5M bearish engulfing after tap of $60,383, stop loss, $60, 520 take profit 1, $59, 900 take profit 2, $59, 662 risk, reward, TP11 1.5R invalidation. Void if 5M candle closes above $60, 450 strategy number 2, the liquidity grab. This is the counter-noise scalp that hunts the stops right above the recent swing high. Smart money knows that breakout traders are piling in above $60,450. Their stops and entry orders cluster around $60,500. So what do? They push price just above that zone to trigger the breakout, then slam it back down. We want to catch that slam. The trigger condition is a fake breakout above $60,500 that immediately reverses and closes a 5-minute candle back below $60,450. That's the snapback confirmation. Entry on the close of that candle, around $60,440. Stop loss goes above the fake-out wick at $60,650. That's your insurance. The target is fast and singular, $59,800, the nearest intraday liquidity pool where stops from earlier longs will be resting. This is a one-target scalp because it's counter-noise and you don't want to overstay your welcome. Risk is about $210, reward about $640. That's a 1 to 3 hour profile. Warning: this requires fast execution. If the snapback is sloppy or the candle closes with a long lower wick. Abort the liquidity grab entry, $60,440, 5M close below $60,450 after fake breakout, stop loss, $60, 650 take profit 1, $59, 800 risk, air reward, 1:3.0R invalidation, void if price fails to reclaim $60,450 within 2 candles now. Are you scalping this week or are you swinging? I want you to comment right now, scalp or swing. Drop it in the chat. Let me see where this community is positioned, because I suspect most are scalping, but the big money is on the swing. Strategy number 3, the session swing. This is the trade that aligns with the daily and weekly strong sell trend. It's not an entry you take right now. It's the setup you wait for, and when it arrives, it carries a multi-day move down to $58,100 and potentially $57,288. The trigger is a rally into the 20-day moving average resistance band. That's $63,075. But I'm giving you a cleaner trigger, a 4-hour close below $62,800 after price has visited the $63,000 zone. Here's the logic. If Bitcoin manages to squeeze higher over the next day or two, the 20-day MA acts as a gravitational ceiling. When price gets there, it will attract a ton of sell orders. We want to see a 4-hour candle close below $62,800 confirming the rejection. That's your entry, around $62,750. Stop loss goes above the swing high that forms near the MA, at $64,200. That's a wide stop, but it's necessary to survive a fake out above the MA. Your first take profit is the risk level that the analyst reports are screaming about, $58,100. That's a clean 5%. Drop from entry. Your stretch target is $57,288, the S3 support. Once price reaches halfway to TP1, that's around $60,400, you move your stop to break even. And if we get the dump, I want you to trail the stop above each subsequent 4-hour lower high. The invalidation level that would kill the medium-term bearish structure is a daily close above $63,500. If that prints, the swing is dead, and I'll be the first to tell you the trend has shifted. The session SRNG entry, $62,750, for H close below $62,800 after tap of $63,000 zone, stop loss. $64, 200 take profit 1, $58, 100 take profit 2, $57, 288 risk. Reward, TP11:3.2 R invalidation. Void if daily close above $63, 500 before I give you the close and tomorrow's wildcard, a 30-second truth bomb. Never risk more than 1 to 2% on a swing. And on scalps, your risk should be even tighter. Scalps demand discipline. No positions through high-impact news like the quarterly close or a surprise Fed speak. Stops are non-negotiable. If your stop gets hit, you step back and wait for the next setup. This is how you survive to trade the next big move. I've seen too many traders blow up on one bad over-leveraged trade. Don't be that trader. Alright, here's the close and the retention loop that I need you to internalize. The single most critical level for the next 24 hours is $58,100. That is the line in the sand. If Bitcoin loses $58,100, the quarterly close turns into a capitulation event, and the whole monthly trend accelerates. Lower. Tomorrow I'll be watching whether the daily candle confirms a rejection at $60,383, or whether the bear flag resolves early. If this level breaks, the blueprint changes, and I will have an updated video 24 hours from now with the exact path to $52,000. Do not miss it now, the binge loop. If you want the full breakdown on the S&P 500 gamma structure that's dragging Bitcoin lower right now, that video is live. Tap the end screen right now. It's S&P 500 gamma trap. 5,200 is the line in the sand. That video will give you the equity side of this risk asset shadow, and the exact levels where the correlation breaks. Then hit the bell so tomorrow's alert lands on your phone before the London Open. Hold the like button, smash subscribe. Every signal you send tells the algorithm to bring you the levels that matter before the move happens.